Rate increases by the Bank of Canada and the media with their salacious headlines have completely taken a sledgehammer to the real estate markets in the major areas of Canada. The prospectus of the very vocal and very out there Bank of Canada has made sure that everyone is completely aware that we can expect further rate hikes coming forward. And this has completely sidelined the majority of buyers from acting, and fairly enough, right? This video today is all about whether the Bank of Canada is going to get it wrong on the way down, just like they did on the way up. If you're interested in learning more, let's get at it. What's good, everybody? It's Darin Germyn from the Germyn Group, where we know you've only got one chance to either buy or sell your next home. So we're here to help you get it right. Make sure you check out the description below because we've got some wicked high value PDFs for both home buyers and home sellers that you don't want to miss. And do me a solid and smash that subscribe button. We are trying to reach 1,000 subscribers by the end of July. And when nice people like you subscribe to our videos, it not only helps our channel, but helps other great people just like you find our content and get good information about the real estate market in Surrey, BC and surrounding areas. Okay, so I did a video back in late January and it was aptly called that the Bank of Canada is absolutely failing Canadians. They were failing Canadians by sitting on the sidelines, sitting on their hands and watching the Canadian real estate market absolutely run away in terms of pricing. It was an incredibly frustrating market for everybody. The realtors hated it because it was so out of control. The home buyers hated it because they had no way of knowing if their offer was going to be accepted, if they were paying a fair price for a home, and homes were moving so quick, they had to make decisions on homes that they may have not even ever have purchased in the first place had the market not been so out of control. So as time went on and this market got to absolutely crazy and peaked markets in about February and March of 2022, the market changed. Fast forward to today, we are seeing interest rate levels that we have not seen since about 2019. For the first time in about 2 years, we've seen home sales in Canada actually dip down about 12.9% from the month previous. In the Fraser Valley Real Estate Board, where I practice my real estate practice, and like that includes North Delta to Surrey to Mission, all those types of areas, we are down an astounding 35% in sales in 1 month. This is the first time as well since June of 2020 where we've had a month that had the sales actually below the 10-year average in the Fraser Valley. The Bank of Canada Deputy Governor, his name is Tony Gavelle, in a speech titled The Perfect Storm, just recently addressed the need of the potential to pause the interest rate hikes. To pause the interest rate hikes. To pause the interest rate hikes. Are we really hearing this and reading this? Is this for real? Well, here's kind of a little bit more to the story. You need to know what the neutral policy rate is. It is the range for the key interest rate where monetary policy has minimal influence on the economy. In Canada, this range is for what we call the overnight rate. Above the range, the central bank is typically trying to cool the market and slow things like inflation. Below the range, however, they're trying to raise inflation via stimulating the economy. Until a central bank hits neutral, it's unclear what the natural level for demand for goods and services really is. Last month, the Bank of Canada raised its forecast for the neutral rate to a range of 2% and 3%, a quarter-point increase. Most economists see the Bank of Canada increasing the overnight rate to 2% by this summer. Yes, the current rate is still at a level that contributes to inflation. That's why they made the biggest rate hike since the year 2000, and they are expected to do it again at the next 2 meetings. Earlier this week, RBC warned that the Bank of Canada might pause rates once they reach the neutral policy rate. They will reassess the situation and decide if they'll need to continue higher. On May the 12th, the deputy governor confirmed that this was the plan. Various reasons could impact whether they'll pause or go past the neutral rate. However, the one that stands out is housing. It has become such a big bubble. I hate saying bubble, but it's become such a big bubble. It may now weigh on the entire economy. It's worth emphasizing again that the pausing at the neutral rate is not happening today. It's not happening right now. That would still involve double the current overnight rate. It wouldn't just be higher than when 2020 started, but the highest since the Great Recession in 2007 and 2008. They won't be providing housing stimulus. However, they are warning that they may put inflation on the back burner due to housing debt. Housing is one of the main reasons they might pause interest rates at the neutral point. They reminded Canadians how indebted households have made themselves to get into the housing market generally. And at the end of 2021, the debt to income ratio was 186%, above the pre-2020 high of 181%. The central bank explained this will make households much more sensitive to interest rates. Rising interest rates are designed to slow the economy by making borrowing more expensive. That tends to slow sectors like housing, naturally, right? But this slow might be amplified this time around because the highly indebted households will still face high debt servicing costs and will likely reduce household spending. In fact, much more than they would have otherwise. Our base case scenario includes a slowdown in housing activity, but we could see a larger than expected slowdown due to the higher indebtedness and unsustainably high housing prices. So what does that all mean? Well, in other words, they may tolerate higher inflation if the housing market is in the dumps. And it's an odd take considering that the details of the mortgage debt that they didn't share. So it's interesting, right? The home buyers that bought late in the game towards the peak of the market got burned due to paying such high prices. We actually all really kind of got burned because now the prices that we pay for things like groceries or gas and general goods and services due to this inflation. Now, this inflation was caused by many things, but no doubt was one that the Bank of Canada kept the rates so low for so long to avoid a recession, but in turn, they had the housing market take off for way, way too long. And unfortunately, now we're all kind of paying for it. So the question is, will they get it right on the way down? What do you think? I would love to hear your comments below on, do you think the Bank of Canada is going to get it right on the way down? Some pretty interesting stuff in today's video. I hope you learned something. It's going to be very interesting to watch. Again, guys, I want to thank you for watching. I'm Darin from the Germyn Group. We know you only got one chance to buy or sell your next home. We're here to help you get it right. Make sure you subscribe and we'll see you on the next video. Take care.